Central India's first and only daily show dedicated to the world of startups and entrepreneurship. I'm Chandra Shrikant, joining you live from India's startup capital, Bangalore, and we have a power-packed lineup over the next 20 minutes.
I'm Kumar, coming to you live from ET Now's Mumbai studios. First up, a look at all that's making headlines in the world of startups. Governor Rajan opens the floodgates of investments for startups, proposes to allow venture capitalists to transfer investments to local investors, also moots rupee-denominated foreign loans and simpler reporting of FDI in startups. And it's not just the RBI. In another shot in the arm, the Companies Law Panel recommends path-breaking proposals to revamp the Companies Act and provide a fillip to the startup community. Google's parent company Alphabet crushes Wall Street estimates with its quarterly earnings, rakes in profits of nearly $5 billion, topples Apple to become the most valuable company in the world. Big Blue IBM is betting big on India to push its cognitive computing platform Watson. CEO Ginny Rometty, who is in Bangalore today, says the 21st century will belong to India as it will be at the center of the fourth technology shift. And Yahoo is all set to fire over 1,600 employees in what comes as proof of the mounting pressure on the internet giant from the likes of Google and Facebook.
Over to our top story then. Now, Raghuram Rajan has always enjoyed a rock star status when it comes to economy and banking. But he managed to do the same when it comes to startups as well today, hasn't he, Krishna?
Absolutely, Chandra. The Modi government's push for startups has one more champion in the form of Raghuram Rajan. Even as he kept interest rates unchanged at the credit policy review, the RBI governor unveiled a series of measures to make it easier for startups to raise foreign capital and do business in India. The RBI plans to enable startups across sectors receive foreign venture capital investment and also enable transfer of shares from foreign venture capital investors to other residents or non-residents. The central bank is also in discussion with the government to allow startups raise rupee-denominated loans from foreigners and permit them to use innovative convertible instruments to raise funds. It also wants the government to allow them to issue shares without cash payment through sweat equity or any legitimate payment owned by the company, provided the payment does not fall within the ambit of the Foreign Exchange Management Act or FEMA.
Keeping with the government Startup India initiative, the Reserve Bank will take steps to ease doing business and contribute to an ecosystem that is conducive to the growth of startups. These measures, which we'll announce shortly, will create an enabling framework for startups receiving foreign venture capital, will also allow differing contractual structures embedded in investment instruments, allow differing receipt of consideration for transfer of ownership, create facilities for escrow arrangements, and simplify documentation and reporting procedures, some of which are already in place.
A slew of measures, but to really help you demystify and decode that, we have two experts on the show today, Mohandas Pai as well as Rajiv Khaitan, who've been working with the RBI very closely in the last few months to really come up with these proposals. We'll take it first to Mohandas Pai. Sir, let's keep it simple here. Just tell us the three things that really stood out for you among the various measures and also why.
I think the first will be the deal structuring, that is making sure that a convertible paper or a convertible note can be issued by startup in dollars, because the terms of conversion will be known based upon the second round, and that created difficulty because the RBI said it is like debt, because the conversion is not defined. Now I think the clarifications have come, and we have read the fine print, but it's very interesting. The second is for M&A, where there is deferred payment, there is escrow accounts and all that. Governor Rajan has explained about that. I think it's very important because M&A becomes easier, and M&A had become a greater block. And the third is about filing documents and a special dispensation for startups. So filing these documents and making sure things are easier, doing away with a lot of stuff, I think is great. And finally, the fact is said that it is going all out to support the Prime Minister's initiative for startups. I think that the fantastic statements to get. There's an alignment in the government, the Finance Ministry, the Commerce Ministry, the External Affairs Ministry, the Prime Minister's office, now Governor Rajan and SEBI, they all come together and all of them are saying they're going to support along with the Prime Minister. I've never seen it happen like this in the last 20 years. Even in the IT industry, we never had such a clear alignment in response to the Prime Minister's call. Of course, no Prime Minister made a call like Prime Minister Modi has done. So I think this is a fantastic day for all of us.
Mr. Khaitan, leaving all the legalese aside, if I'm a startup or about to start one, what do these norms mean for me today?
So the startup policy that has been announced today is likely to expedite the fund flow and ease the fund that will flow into India from both foreign sources as well as Indian HNIs.
Mr. Mohandas Pai, this is Krishna from 18 Hours Mumbai Studios. I want to ask you, what will it take from here on to implementation, considering this involves different arms of the government?
See, DIPP is on board. Amitabh Kant is fully on board. And I think now government, after the amendment in FERA, does the policy for foreign exchange. And the regulations are done by the RBI. The regulations now are going to be issued today. The press release is there, and they said the regulations are going to be issued today, subsequent to this meeting, and that's fantastic. And I'm sure that if any policy decisions are there now, the regulations have been issued, the government will issue them. So I think our needs have been substantially met. Of course, we'll go back with further things that we need with Governor Rajan, and I'm sure he's very sympathetic. We had 3-4 meetings with him, and he's always been sympathetic because he understands the innovation system in the United States. He understands the need for such innovation. He has met with the startups. I think he's sufficiently impressed about the level of innovation all across the board, including fintech. So I think it's very good.
All right, Mr. Pai, I'll take your word for that. I'm going to head over to Mr. Khaitan then. Mr. Khaitan, if I'm a startup looking for more sources of funding, the all-important funding, has my life been made easier in that sense with all these new proposals?
Yes, so basically this is only a policy announcement of what the Reserve Bank will do, and basically they are trying to remove some of the hurdles that were there in the policy. For example, simplified filing. Earlier, for a simple receipt of foreign direct investment, there were three levels of filings. One, when the remittance came in, at that time we had to file one form. Then when the shares were actually issued, at that time again it was a form FC, GPR or TRS was filed depending on whether you bought the shares or the new shares were issued. And again there was an FC GPR filing on an annual basis or a 6-monthly basis at times. So the process was cumbersome because you had to wait for a filing number or UIN number to be issued by Reserve Bank. And that was, creating some hurdles in the system at times. So now what they have done is they have created an online system for filings, which will really simplify the process. All 3 stages of these filings will become online and hopefully much better for a startup to use.
Mr. Pai, one space that's really hot in the startup world today is fintech and the whole payments area. Are there specific things that the RBI can further do to really, make it easy to do business as far as these areas are concerned?
Well, Aadhaar is 1 billion people. That's fantastic. DBT is a reality. It's worked very well for LPG. It's working now for kerosene. It'll work for food. That's fantastic. It's going to work for scholarship. It's already working for scholarship. So all government payments will be by DBT. That's fantastic. The India Post is going to be a part of it, and they got a payment bank license. And I think they have 157,000 branches. So we'll have a network. Some 8-10 payment banks are coming up, and I think that's fantastic. The big banks are beefing up their payment structures. That's very good. Mobile payments have been eased. Can be eased much more further. Peer-to-peer lending is coming into being in India. There are many innovative companies. There are companies which switch mortgages to, and I think that's fantastic. And we are seeing a lot of grassroots innovation at the payments level. So I think the ecosystem is getting in place. Now we must wait for all of them to come up to such a size that they really impact the financial system.
Mr. Mr. Khaitan, as someone who's met the RBI governor frequently over the last few months, are there still measures left for the RBI to do any items that were not crossed on your wish list?
So actually, we had asked for some 9 or 10 things from the RBI, and what we have heard today in the announcement is response to at least 6 or 7 of them. So most of what we had asked for has been announced as the policy. Now we will see how this policy turns around into a notification. A few things that have not been done, we understand, are work in progress, and they may look at that as a second stage. So most of these things that we had asked for was really for ease of business, which has really been announced. So some of the things that we had asked for were really needing statutory changes or things like that, which has not yet been announced. So what could have been changed by policy? I think they have covered that all.
Mr. Pai, before we let you go, there's still a lack of clarity on the taxation front because the rules are different across states and also the ambiguity around the marketplace, isn't it?
Well, I think the DIPP should call a meeting of the state governments and ask them about the marketplace and ask them to come on board. I think it's very essential. And I think it'll all happen when GST come into being. I think GST is essentially the key. And the Karnataka Finance Secretary has said very clearly he'll support it. He's come out with some, I think he said he'll come out with some new norms. That'll be very interesting. And the fact that the e-commerce companies have become so much a part of the landscape, they're transforming the way people buy and sell on the internet, and many things have happened. I think we are coming into the mature phase. So it gives me great hope that this budget and after the budget, we will see greater clarity. Tax terrorism is coming down. There are still some remnants of tax terrorism in the system, and tax terrorism is coming down. Government has tried to reduce tax litigation. The finance minister said he wants to reduce it further, and there's going to be simplification of process in the new budget from all indications. These are all great moves. So 29th February will be a D-Day for India.
All right, let's wrap this discussion up with one last closing comment from Mr. Khaitan. Mr. Khaitan, are you hopeful of a smooth implementation, between the various arms of the government involved?
So yes, you see, there are 3 or 4 arms of the government which are wanting to, ease the business for startups. So each arm of the government has to play its role. RBI has played its card now. MCA had done partly yesterday when the report of the committee was released to the public. Startup India policy was announced on 16th. So all are in the same direction of ease of business. Now we have to see how these policy announcements convert into actual notifications and ease of business. So I think it's steps in the right direction by each regulator, and hopefully we will see these notifications also very soon.
Mr. Mohandas Pai, Mr. Khaitan, thank you so much for taking time out to be with us here on ET Now Startup Central to discuss that big story. Now moving on to another shot in the arm for startups and a big boost to the fundraising plans of the startup community. The Companies Law panel set up by the government has recommended sweeping changes to the Companies Act 2013. The panelists proposed a hike in the sweat equity limit for startups to 50% of the paid-up capital from the existing 25% in a bid to spur non-financial investments and further incentivize innovators. The panel has also given the nod to remove the limits on raising of deposits from members for startup companies for the first 5 years from their incorporation. This relaxation will reduce the additional compliance costs for the sector. The ball is now in the court of the Ministry of Corporate Affairs, which has set a deadline of the 15th of February for inviting public comments.
In fact, to take this forward, we have an expert from Nishit Desai Associates, Karthik Maheshwari, joining us live on the show. Karthik, tell us in simple terms what this really means as far as startups and aspiring entrepreneurs are concerned, the whole changes to the company law.
Sure. Thank you. So I think what these changes will need to be read with is in line of, the MCA amendment which has recently come out in terms of, as part of this whole process of easing of doing business in India. And as part of this, I think a few critical changes is the fact that incorporation of an entity is being eased up. And I think this links directly back to the Prime Minister's announcement of having a mobile app and a one-day incorporation. So there are several steps in this, especially with respect to it was fairly procedural in terms of how you choose a name of an entity. Something as simple as that was fairly procedural. You had to go reserve a name. Now what the government has proposed is that there's going to be a central repository which will decide on the name, and therefore fairly shortening the process in which a company is incorporated. So I think this is to start with is one of the most important changes. The whole incorporation process is one of the most important changes which has been brought about. Jumping directly to the second and the most important one, I think, is in terms of ESOPs, right? And which is what most startups worry about. So under the Companies Act 2013, promoters, promoter groups, and any director who held more than 10% in a company was prohibited from getting ESOPs. But now, the committee has proposed that ESOPs will also be extended to them. Could be extended to them, subject to, again, the fine print that comes in on this. But I think this is one of the major changes which will, give a major boost in the arm to startups, because this has been a major pain point, especially with, founders who are starting up and get diluted to a certain extent, but still want, incentive-based ESOPs. This is proving to be
All right, Karthik, I want to quickly get a comment from you on, talk to us about in terms of the implementation, because that's crucial for all the path-breaking reforms and the revamp that is being suggested. What is your take on implementation? Will, the number of days required to register a startup, go lower thanks to all the new norms?
Looks like it. Hopefully, it should go substantially lower, but a one-day incorporated company still seems some time far away, if you'd ask me. But, the timelines seem like they are on way to be fairly crunched.
Thank you for your thoughts, Karthik. So clearly a leg up coming both from the RBI as well as the MCA, but we really have to wait and see what the execution and implementation will entail, because that will be crucial. But moving on to the story that's really making waves across the world. Now Google got a new name last year, Alphabet, and now it's also got the status of the most valuable company in the world, really going past Apple, thanks to its latest results, where it posted stellar numbers that beat estimates thanks to its search and ads business. For the first time, Google also disclosed financials of the moonshot businesses that come under Alphabet, and no surprises there, those businesses were clearly not profitable. But for more details, let's look at this report.
Put your hands together for the new king of companies. Google's parent Alphabet has dislodged Apple to claim the top spot as the most valuable company in the world. In its first ever full quarter of earnings report, Alphabet posted a staggering $4.9 billion in profits and $21.3 billion in revenues, crushing every single industry estimate. And that sent the Alphabet stock soaring over 8% on Wall Street, taking it past Apple in terms of market capitalization, with a net worth of $568 billion as compared to the iPhone maker's $535 billion. In fact, Google's share prices have risen by over 8.5 times since 2004. Alphabet separated its massively profitable Google search and advertising business from its other bets portfolio that includes its moonshot projects like Next, Google Fiber, Google Capital and Google Ventures, which have set the tech giant back by $3.5 billion in 2015. Keep in mind, the company has been under immense pressure to be transparent as to how much cash it was splashing on things like driverless cars, internet-enabled helium balloons and Google Glass. But those losses were dwarfed by Google's core, which reported operating income of more than $23 billion, with display ads continuing to be the cash cow for the company, contributing 90% to their total revenue, something that holds the investors on Wall Street in good faith. If last week Apple was being punished for not sharing enough big ideas for the future, it seems like Alphabet is being rewarded for spending big on its many technology gambles. On to the other big story that we're tracking over here. Big Blue IBM is betting big on India to push its cognitive computing platform Watson. IBM CEO Ginny Rometty, who is in Bengaluru today, said that the 21st century will be India's century and that the country will be at the center of the fourth technology shift, which is cognitive computing. She also said that IBM is working closely with startups through hackathons and is also setting up a corpus fund to invest in them. And in what comes as proof of the mounting pressure on Yahoo from the likes of Google and Facebook, Wall Street Journal has reported that the internet giant is all set to fire over 1,600 employees. Not only this, an elaborate cost-cutting plan is also on the cards, with several business units to be shut down. According to the report, the announcement is likely to be made after the company reports its fourth quarter numbers tonight.
Over to the final segment of the day then, and the number we are crunching for you today is $568 billion. Now, why is that number significant? That's the market cap of Alphabet. But to just give you a sense of the scale and scope of that number, it's 14 times the market cap of the Nifty 50 combined. So that really gives you a sense of the humongous epic proportions that Alphabet's managed to achieve. And I guess swallowing the Indian stock market is going to be a complete cakewalk for Alphabet. Krishna.
Absolutely, Chandra. That number is just mind-boggling. In fact, coming up next is Market Watch with Ajay Sharma. And Ajay and I were actually crunching that number, making those calculations, and we couldn't believe our eyes when we saw that, wasn't it, Ajay?
Well, that's correct, Krishna. You know what? The way markets are falling almost on a daily basis as far as Indian markets are concerned, you never know, in the next couple of months that number of 14x could go higher to almost 17, 18 or 20x. But we'll get you how the market fared after this very short break.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.